Welcome to Unblocking the Chain. My name is Michael Prendiville and I'm your host for today. Welcome to co-host Catena Digital CEO and Jelly Seed Chair, Drew Bradford. Drew, you're looking good.
Thanks, Chris. Good to be here.
Good on you, mate. And we've also got Menas, our producer in the background. Menas, looking magnificent in that shirt of yours. Also, a huge welcome to Toby Abbey, who joins us in the studio, and Ed Carroll, who joins us remotely. Both gents are from the Australian crypto and blockchain investment firm MHC Digital Group. Welcome, fellas. Great to have you here today.
Thanks for having us.
Okay, so just a quick mention of everything that's been going on in crypto over the last few weeks.
It's been busy.
Wiping the sweat off our brow, Drew. It's been so busy that I had to check myself into the health farm on the weekend. So a quick recap. A couple of weeks ago, we were up in Singapore for Token 2049, and that culminated in a jelly seed dinner, which everyone here was present at, and that was good fun. Then on the Thursday, we had the pre-Macropod party, and boy, that was good. So
Yep.
I was a little bit worse aware. Toby, how are you feeling after that, mate?
Oh, good. It's been a big couple of weeks. That's why the voice is still a little rusty, but it's coming back.
Yeah, it was a big weekend big week up in Singapore. In fact, it was so big that I went to the conference and there was a line almost 1,000 metres long. That's how packed it was. So good time up there. But back to Sydney last week. And on Wednesday, we had the opening night of Macropod, so another huge function, and reminded me of the parties back in the early 90s with the bankers. That's how
They don't do those anymore.
Oh, no. There's
Don't say that.
electricity in the air. No, it was a fantastic night.
That was a lot of fun.
Right, it was bloody good. And then on the Thursday, we had the Digital Asset Awards, and thankfully we've got Drew, who came in at number 7, and ahead of him were pretty much the politicians and the regulators. So Drew, in my mind, I've got you at number 1.
Number 1 on the building side.
Well done, mate. It was a big effort. But enough of that. Let's move on to the reason why we're here. Catena Digital has entered into a joint agreement with MHC 50/50 to form Macropod. It's exciting times. So Toby and Ed are two of the people that have helped make this happen. They are right on the forefront, and henceforth the reason that they're here today. So I just want to give a little bit of background on both gents. They've both had impressive careers up to this point. So let's start with Ed. Ed is a global head and global head of markets and corporate finance at MHC Digital Group, where he plays a pivotal role in driving the firm's strategic expansion from its Singapore base. And just on that point, he was seen working out on the weekend after a huge couple of weeks. And normally he's Mr. Fitness, but he wasn't faring too well. So I've got my spies up in Singapore, Ed. Good on you, mate. So just moving forward, with a background in finance and deep understanding of digital assets, Ed has been instrumental in shaping MHC Digital's business plan, regulatory engagement, and operational build-out. He is a vocal advocate for the integration of digital assets into institutional portfolios, emphasising the transformative potential of blockchain technologies and the importance of regulatory clarity. It has publicly championed the role of Bitcoin and stablecoins in modern finance, and why wouldn't you, Ed? Forecasting significant growth in digital asset adoption and positioning MHC Digital at the forefront of this evolution. So, mate, it just makes sense that, you're all over the Macropod with the stablecoin. So, Ed, good stuff, mate. And on to Toby. Toby's key figure at MHC Digital, actively involved in trading and operation strategy across the firm's digital asset initiatives. Toby has been consistently engaged in high-level discussions and meetings concerning market structure, fund performance, and strategic partnerships. He has contributed to shaping MHC's approach to price-making, exchange selection, and fund integration strategies. Toby's insights have been instrumental in aligning MHC's trading operations and broader institutional goals. So once again, it makes complete sense that Toby's front and centre on this, price making, the tech side of it all falls into your lap, Toby. So, mate, great to have you here.
No, great to be here.
Good on you, mate. So, moving forward onto the questions, let's get stuck into it. Manners is telling me to move along. Ed, let's start with you. Where did it all start? How did you get into the industry? And then we'll move on to Toby after that.
Sure. Thanks for having me, Kuda and Andrew. I think I kind of fell into this by mistake, actually. So my background was, I was 11 years at Macquarie. I started my career in FX, but very quickly realized that I was more sort of a transactional type and ended up moving into the principal investment team at Macquarie. I did a whole bunch of different investing and transaction work there for sort of 8 or 9 years, and then moved over to Mark Carnegie's traditional asset management platform, MHC Carnegie & Co., to help run the private equity business there. Very quickly after joining, that was probably about 4 years ago, Mark came to me and said that he thinks that this blockchain technology is going to be a thing. So why don't we look at building a platform to support institutional adoption of it and use cases? We didn't really know what that meant at the time. There really wasn't much regulatory clarity. The whole world was kind of, it was just pre-FTX, so sort of 3.5 years ago. But we did know that there was something there, and we just wanted to start exploring it. So what we then did was started building out a kind of financial services platform, or investment bank, if you will, to look at deploying and participating in the kind of more mainstream opportunities to start with, but really to look at where blockchain technology could really impact, traditional financial products and services and disrupt sectors. To that end, now we've built the group into a couple of different verticals. The first being the sort of asset management division. We've got a liquid strategy. We've got a venture business, and then the more sort of obvious then place to play and build was on the market side of things, and looking at sort of building out an OTC operation and looking to really facilitate institutional adoption of that, with a real focus on, frankly, like there's sort of two tiers to that in the first phase. Really, firstly, the applications of and the sort of use case for Bitcoin in a well-constructed portfolio, so provide access to that in an institutional grade fashion. And then secondly, built around the thesis that stablecoins would change the world. And so in order to do that, we needed technology, we needed capital, and we needed people with a lot more market experience than me, and to Toby, who I've known for a number of years. And so then Toby and I got to chatting, and that's how we ended up partnering up to build out the digital group platform, particularly with a focus on the markets. And then that's expanded today into building out the joint venture with Drew and team to help start and then facilitate the growth of Macropod.
Magnificent, mate. It's not like it's the dynamic duo. So, Toby, give us your story. How did you get into digital assets, and how did you come to be with MHC?
So my background's in traditional markets. I was a proprietary trader, trading primarily futures in the Australian and international markets from 2007 until 2017. And the back end of my career, I was very focused on the fixed interest markets, which sort of led me to a deep understanding of how central banks work, and coming out of the GFC and all of the quantitative easing and things, you could really see that there was trouble in markets, and governments are very keen to debase, to move away from things. And then I guess I was heavily involved in algorithmic trading strategies, and you could really see the advent of technology moving into that space. And once I understood what Bitcoin potentially meant for the financial system, and then particularly Ethereum with smart contracts, I could see that this was a wave of financial technology and innovation that I wanted to be in front of. So I jumped on a plane. I think I went to a conference in Shanghai. I learnt everything I could, and then pretty much never looked back. Put down the mouse and stopped trading because it's a bit of an addictive pursuit. And from that point on, I tried to build a network of people around. I got heavily involved in the venture scene, investing in layer one smart contracts, because I had a big thesis that these smart contract platforms would deliver the innovations in finance that I was looking to see happen. And yeah, number of ventures along the way, a crypto derivatives trading venture, and then always in the background I've been trading myself, and set up a spot arbitrage business, and that built the foundation for the technology that we've built, the MHC Markets platform, and that began the conversation with Ed, and then I became a co-founder of MHC Digital, and yeah, that's sort of the genesis of the story.
Magnificent,
Awesome.
mate. So when you put your mouse away,
Yeah.
Was it? Does that mean that you ripped off the sell key and you really only started buying?
Pretty much.
Yeah.
My view has been to be basically long only crypto because it's one of those asymmetric asset classes, and we're so busy running and building these businesses that unless you've got time to be all over the screens, you'll get wiped out like on Friday. I think the entire market got liquidated on that one.
Yeah,
So.
19 billion. Just big. Actually, it's funny. I listened to a podcast from that Dan Moorhead was on, and he said the worst thing that he's ever done in crypto is sell anything.
Pretty much.
Yeah. So I have to say, my own experience, if we had have just sat on everything, we would have been a lot better off.
Yep.
Virtuals comes to mind on that one. So.
Easy said.
Well,
done,
that's
Chris,
right.
With the
Exactly.
amount of
I know
volatility.
you see go up and come off, and then go up and come off on a number of different cryptocurrencies, and then all of a sudden the one that you take partial profit on, rips and keeps on ripping. But,
It's always the way.
yeah. Okay, so we've covered the next question. So how did it all start for MHC, and what is the history? But maybe Toby, maybe you give us, because you sort of skipped on that point. Give us a little bit of the history. Is there anything in there from the MHC perspective that we should know about?
Yeah, well, I guess the overview of the MHC business is probably 4 key verticals. There's a funds management vertical that's taken care of by a number of experienced portfolio managers and a venture team.
Yep.
The other key verticals are on the sort of market side of the business, which is spot liquidity. We've built a platform. You can log in, self-execute. We like to think we've got the sharpest prices in Australia and deepest liquidity.
Yep.
So we're pretty proud of that. It's got APIs so people can build their own automation on the back of our systems. And then adjacent to that, we have our own AFSL, which is quite unique to the business. And that'll come into part of the later conversation. So using that AFSL, we've done a partnership with Falcon X to distribute crypto derivatives into the Australian market in a regulated fashion using the license. That's about to go live very shortly. And then similarly, we have done a deal with Anchorage Digital to provide regulated custody into the Australian market, because that's something we see as quite key for institutional adoption. And while custody can be a bit of a boring side of the business, it's an important side of the business for institutions to get comfortable with, and we think it helps bring other people to our other 2 verticals of the business. And then I guess beyond that, the main thing we're spending all our time on at the moment is Macropod and AUDM, because we're super bullish on that one.
Yeah. Yeah. So on the custody side, make sure the assets are secure, and then after that, you can go away and do what you want.
Well, exactly. Sometimes you just got to get the basics right.
Yeah. So Ed, just quickly.
I'd also just add to that though, Chris. Like I think that particularly in Australia, like I'm up here in Singapore, and we've all spent a lot of time, all 4 of us, I think, traveling around looking at where things are going. And I know we will get to a bit more of a discussion on regulation and the like, but I do think that Australia in particular relies on trust and to facilitate adoption, and timing of delivery of that trusted product as well is critical to make sure that we really do bring to market the right things at the right time. And a lot of what we built at MHC was predicated on the idea that at some point the world would want and would need it. And so, the adjacency and the obvious kind of like leverage of having what the learnings and the relationships built from the markets platform, and how that can then translate into helping to facilitate the growth of the Macropod business as an adjacency is really, really exciting. But I think more importantly as well, the timing of that and the appeal of having, Drew leading the business as CEO with his profile and contacts was what really made the match made in heaven with us, because we were like, now we have the trusted product and the trusted platform to deliver something which we've all firmly believed for a very long time, which is a stablecoin. And the use of blockchain technology. It's now is the right time for the world to see that, because we're seeing this kind of absolute, aggressive acceleration of regulatory clarity and adoption of the technology as a solution.
Yeah, look, we saw that whilst we were running around in Singapore and a few other places around the world. We've now got the initial start of our version of the Genius Act and our version of the Clarity Act. We've got payments modernisations. Hey, stablecoins are a real thing. That will play out in consultation over the next little while. and now also a structure on what do you need to be a digital custodian. What are you going to need to look and feel like to be a regulated exchange in Australia? And I think both those pieces will be our Australia's version of the tipping point, where people go, oh, you know what? Hey, this is real. There's been a whole lot of industry practitioners trying to tell everyone this is real. And now we're getting Treasury coming out and regulating it. So we are here to stay.
Well, I was just going to say also, I think the critical thing as well is the development of the framework around defining the services and then defining and regulating the providers of those services is a lot more effective way to do things, but also the carve out of stablecoins and the issuance of them, consistent with the Genius Act and what we're seeing now with the guidance from Treasury, I think is the most exciting part, because it really does give a green light for, stablecoins are really just a technology solution which can completely disrupt the way that the money moves around. And there's so many applications, like sort of to Toby's point earlier about the way that you can use smart contract technology to automate things, because it makes money programmable. And so having that clarity is just so critical. And so to my point before about timing, the timing is right now, because that's what things are accelerating, and so we want to be the forefront of that.
Ed, you've hit the nail on the head. I was going to say before, instead of 3 rockets, for Australia, we need 5. That's how bullish I am on it. Anyway, I think we're all agreed it's very, very bullish, on the stablecoin side and on Australia. So just moving back to you, Toby, tell us why MHC Digital wanted to get into stablecoins. Really, you probably covered that part of it, but just give us a little bit more context on why it made sense for MHC.
Yeah, so a bit on the background there, stablecoins have really proven themselves to be one of the most important innovations in blockchain tech. I'd sort of say you've got 3 streams. You've got Bitcoin, which is your store of value, been extremely successful. You've got smart contracts, which can facilitate tokenization and assets and swaps and lending and things. And the key product that's come out of the smart contract platforms has been stablecoins. Yep. We've crossed over 300 billion in assets. It's very real, and it's getting realer. It's become a strategic importance to the US administration. It's become the cheapest source of reliable funding. And
bless the Donald.
Exactly. But we see in our business that it's become like the de facto currency of many emerging nations, particularly in Asia. And I think we're already at the point, and I think we're going to see a lot more of people invoicing in currencies like USDT and USDC. And our business, although we built a digital asset business to sell people Bitcoin and Solana and Ethereum and all these different things, they come to us for stablecoins. Yeah. 95% of our flow is USDC and USDT into stables. So the stage was sort of set that the demand into Aussie dollars from USD stables is very, very high. So we wanted to meet that. It's been a project we've been working on for many years in the background. We did a partnership with Circle some years ago to be their chief liquidity provider into and out of Australian dollars. So yeah, it's been something we've looked at for a long time. And Mark and the team had always had the view that a lot more regulation was coming, hence the AFSL. We've had a non-cash payments license lying in wait for a long time to utilise it for a stablecoin. And I guess the beauty of the tie-up with Catena to create Macropod with Drew is that they had the same view as us. They're bringing a lot of credibility and experience from the banking world. And on the regulatory front, with the relief we've received from ASIC for downstream and exchange users of AUDM, it's really a great combination. So.
Yeah, absolutely. I mean, we're Jelly C. We're looking forward to using that relief to assist MHC on the price making side. We're and
we'll save you some foreign exchange fees too, Chris.
Shit, you Troy, mate. I'm excited. Call me Big Kev. So we know there's a huge opportunity to create something massive in Australia. Drew, what are the next steps to get AUDM functional?
Well, look, we're talking to a number of the exchanges about it, but there's a number of use cases. We talked about, Australians pay $6.5 billion a year in Visa, MasterCard, merchant service fees. Transactions on one of the blockchains we are on, the Red Belly network, is less than 1/4 cent. So each time you tap your card, you don't see $5.17 for the coffee. You once we get Macropod into the mechanism, which we're working on a few things, that will be $5 when you buy something for $5.
Yeah.
And you're not paying 6 months worth of interest to tap your card. So we're working on a number of things. Hopefully a few of them will come out in the next 2 or 3 weeks as to delivery of the product. We're also having one of the things, and Toby's touched on this, with the smart contracts, more and more regulators are actually going to want to see money on smart contracts so that they can see where it is and what's going on. These smart contracts are a gateway to get rid of scams as opposed to be part of scams. And, there's a whole lot of things. We're at that tipping point where people are going to realise that stablecoins are a better way to transact than fiat.
Let's flip the script there, Drew. So you're saying that instead of the regulators being, or the government being happy with people transacting in fiat, they're going to demand that they're on the smart contract side.
I see a lot of the way, we look at Elliptic, which is a service provider. We've got what they can tell us around every transaction in real time as it transacts. That will be something, if Austrac asks us anything or any of the regulators ask us anything about the payments, we can answer that in real time. If they go to a bank and ask what happened after you sent that money off to one of your correspondent banks, the banks can't answer that question. They can't answer it actually at all, let alone in real time exactly where that money is.
Yeah. Yep. Okay. We have a lot of young viewers, listeners, I should say.
And viewers, YouTube as well.
We're viewers. So our viewers is quite big. But
26,000 views last month.
I just want to bring it back to these guys because they are our followers, our listeners, viewers. So really they want to know when they can start using AUDM. So I'm going to throw it over to you, Toby, as a price maker, liquidity provider of AUDM. Can you give us a sense on timing? When I'm getting a lot of questions.
Well, our first mint was last week, so that's the main milestone. We are live.
Yep.
I am desperately knocking on the door as the market maker to stand up some Uniswap pools, so I should expect that's going to be this week.
Yep.
So the answer is very, very soon.
Ooh. It cannot come too soon for Jelly C.
No.
I know that, but there's a process too. I've just got to say it. We've got to onboard all the users going through one of our service providers, so we make sure we do our KYC, AML stuff perfectly.
Dot in the
I's.
Dot in the I's. That's
crossing
right.
the T's.
So we're ready to go, but the other exciting thing is we are trying to work really closely with the local and some of the offshore exchanges because I think they've got the user bases, they've got some great products, they've got card products, they've got the on-ramp, off-ramp. We really want to get into that because I think that's a key distribution mechanism for us. So again, as soon as they're willing to accept us, which the conversations are going well and we believe that's very, very soon, we're hoping to be live and making those markets on those exchanges very soon. And then from the direct mint and burn with Macropod, Rob and the team at Macropod are doing really good on the tech side. So I think we're still looking at an end of October launch date for the platform and people can come and mint and burn themselves.
I want to do a little squeal right now to reflect on the great man Ash Cooper, who would be giving us a little. At this point, I'm starting to get excited. Okay, so Toby, back to you. In your mind, what elements fuel the valuation for Macropod? Okay, so is it turnover, market cap of the stablecoin, and how do you go about achieving this? So, when we look at, for instance, Tether and the things that make up the value of, of that particular entity, what are you looking to do? What are you looking to do to bring trust to AUDM?
Yeah, look, I think our key sort of measure of success will be the assets under management or market cap of the coin. And I think the way we achieve that is turnover. So we need to get it out there, we need to distribute it and get it in people's hands and find those use cases, and I think some of them are really exciting.
Yeah.
Obviously, the first cab off the rank will be local exchanges and local users. As Drew alluded to earlier, we really would love to find a way to disrupt point of sale fees and offer consumers a better deal. We're trying to work with some really large retailers because they're also at the losing end of that. And yeah.
Crypto debit cards, crypto credit cards in Australia, avoiding the fees of having to transact.
Well, exactly.
Instead of having, the balances in USDC or USDT and sort of paying a fee to, to convert, have it in AUDM.
Yeah. And some of the people we're looking to integrate with are providers of those cards. So we think that should be able to get in consumer hands very quickly. And then other key measures of success, I think, will be finding genuine new use cases. Like once we're a key route for the FX market, we'll be offering cheaper rates and instant settlement. And that's a big deal as the world is going, NASDAQ's going 24/5, the world is getting tokenized. That's no longer a pipe dream, it's actually happening. So if you need to settle a trade, you need to settle it quickly or basically instantly, and that's where a stablecoin comes in. So
think about this. NASDAQ have announced that they are going to go 24/5 and tokenize their equities Q4 2026. So in 1 year's time, if you want to be, you could be sitting at your desk at 2 p.m. or 1 p.m. whatever time in the afternoon in Australia, and you will be able to buy Nvidia, whoever you want, on the NASDAQ instantly with a stablecoin. That transaction will settle within a minute. There's no sending your money through CLS and SWIFT one way, waiting for the clearing process in the exchange. The exchange is T+1. Your FX is T+2. All of that issue is going to go away in 12 months' time with a stablecoin.
Yeah. Yep. Yeah, it's going to be big. Ed, over to you. Is there any other use cases that you sort of want to bring up? Think a couple of years into the future, and the turnover of AUDM is going absolutely bananas. Market cap is huge. Is there any other, things that you can sort of see happening that you want to?
Well, I mean, what I'd say to that, Chris, is I think that we've all agreed. One of the things that brought this sort of joint venture together was a common vision for where the world was going, and that is that everything is going on chain. There's kind of been there are still two schools of thought, even in the more institutional side of the sort of crypto world, and that is that some people still believe that only US dollar stablecoins will be a thing and that non-US dollar stablecoins won't. Our view very firmly is that a non-US dollar, in order to believe in the success of a non-US dollar stablecoin, you need to believe in a tokenized future. And the reason for that is that smart contracts enable everything to be programmed. And as Drew was alluding to before, you can embed a whole bunch of compliance in there as well. We expect that you're going to have a huge development in the oversight of the way that, wallets are going to be registered to people who are going to have, so that you can actually decide, who's sophisticated and who's not, who's been KYC'd, where they sit, to make sure that assets that are on chain can only go to wallets, which are verified for people who are allowed to access those assets. So I think really what our bet is that if everything is going on chain, well, in order to access everything on chain, you need programmable money in the local currency of all the different countries that want to access those assets. And we want to be the Aussie dollar solution for that. So the way we've thought about the first 12 months versus the next 12 months and then going forward is, well, where do we start with where distribution is? Where's the lowest hanging fruit for distribution right now to get liquidity, to get the product in circulation? And then what are all the problems we can solve, and what order do we solve them? And so that's why, the most obvious one, apart from, I think Drew and Toby have both alluded to it, there is the exchange flow. There is the opportunity to denominate, crypto in AUDM rather than USD. But then further to that, it's it's a pretty compelling thing to look at bringing, every single payment service company in the world. We were speaking about this the other day, I think on Wednesday. The way that payment service companies and in fact banks manage settlements cross-border right now, I mean, there's two ways. If you want instant settlement somewhere else in the world, there's two ways that the companies currently do it with the incumbent infrastructure that's available to them with the traditional banking network. One is they either they have enough demands that such that they've got two-way flow in every jurisdiction, so that they can settle one person with someone else's capital and fund that way. Or the other is they fund it themselves with their balance sheet, which has a cost. To say nothing of all the additional fees that are embedded in the traditional infrastructure network to facilitate the movement of money, because they still have to have a treasury team which settles that capital globally to make sure money is where it needs to be to facilitate instant settlement. That entire infrastructure, that entire network, that entire kind of web, which is also, to Drew's point, completely opaque, and to the end user, they have no idea how or why that money costs what it costs. They just pay what it costs because they want to get their money somewhere. That entire problem is solved by having an on-chain FX market. So so having an Aussie dollar stable where you can program all that functionality, that allows that problem to be solved in instant settlement at a much lower cost. And so there's always been a question for us of, well, what does that mean for the banks if you're taking away like one of their sources of revenue? Our response to that is, well, actually, we're doing them all a favor, because in fact, in the back end, every single payment service provider, every single bank ultimately will probably use blockchain technology to reduce their cost base. And how they manage their end user is in fact their problem. It is in fact their business. We're just providing an infrastructure solution in a product which makes their existing product suite much more efficient and much lower cost. So that's kind of, we've been very focused on that kind of, there's all these channels, as Drew alluded to and Toby alluded to, and we're just kind of really looking at slowly, rolling out those things, having identified the problems, and then having a fairly orderly sort of program to start implementing them. And as we think that the world's ready for it.
Yeah, so good.
The cost of the current infrastructure around whether you're clearinghouses, SWIFT, CLS, there's all this process as you move money and particularly financial assets around the world. The cost of doing that post-trade processing is actually quite huge. And the smart contract just solves it. There is no post-trade. It's happened. It's atomically settled. There's nothing to do after the trade. The costs in the system will go down by 90%.
Oh, imagine every Australian,
Yep.
all the retail punters out there, our listeners, for instance, imagine them being able to transact at, the interbank rate. You no longer,
There's no clearing risk. There's no
2%.
settlement risk.
Yeah.
There's no, there's no credit risk. It's interest. This is an Aussie dollar stablecoin. I'm switching it for US, whatever asset you're switching it for. No one needs to know who you are. You've got this token. You switch it for another one. Trade's done in a second. No one's worried about will it settle, won't it settle, where actually is it. It's done.
Yep. Okay.
I think ultimately as well, Drew, people don't really need to know that it's a stable a lot of times.
Exactly.
As well. They just need to know that their money is where it is. Like, they don't care if it's Aussie or AUDM. It's one for one anyway. It doesn't actually matter to them. What matters is how much it costs them to do what they want to do. And our point is, it'll cost the incumbent providers a lot less to use our product than it would to use the existing infrastructure that they've got to solve the same, to provide the same product and service.
Yeah, the existing infrastructure itself, and because it's one of those things where you say it costs MasterCard or Visa 1.5%. That's because they've got a whole lot of people doing stuff, right? So it does actually cost them a lot of money to the way money moves at the moment. This will remove that cost in that infrastructure.
Okay, slight deviation, and this is targeted to you, Drew. Tether have just supposedly, looking to raise $20 billion at a $500 billion valuation.
And my friends in the space tell me it's been oversubscribed.
Exactly. Yeah. So what? $1 trillion valuation, maybe. Well, that would let's say 500 billion. That would put it at 3 times its market cap of the stablecoin. So, or thereabouts. So that is a hefty valuation. So
not if you assume the you just take Scott Bessent's prediction that there's plenty of predictions that say stablecoins will be 3 to 5 trillion in 3 years' time. So if Tether keeps its same market share, then boom, right, makes $1 trillion look cheap.
Okay, so with that in mind, Macropod has to go to a Series A at some point. Have you got any sense of what you can share with the listeners on that front?
Look, we've got to build out our tech. We've got to build out our particularly, we want to make everything from a client point of view super easy to use. So people actually, as Ed mentioned, so people don't even know that you're using blockchain. They're just moving their money. So look, getting that, we will get a bit of financing in, and we'll grow the product.
Oh, mate, you should be a politician.
No, but look, it's worth noting one that more and more turnover will happen in stablecoins. I have no doubt about that. The BIS just released their triennial FX survey. We've talked around FX being a really great use case. In 2022, the last release, FX turnover was $7.5 trillion a day. Literally, end of 30th September, they released the latest one. It's $9.4 trillion a day. Aussie dollar still 6% and a bit of that turnover, and the fifth most traded currency in the world.
Big opportunity, huge. Okay, Toby, this one's for you, mate. On Friday night, you touched on it just briefly. We saw a meltdown of epic proportions in the crypto market. 19 billion in leverage positions unwound, probably a little bit more than that because there'd be a hell of a lot of exchanges not picked up in that figure. What's your current view on the market?
So my current view on the markets is when you zoom out, the world's in a very particular place. Like, not to say we're in a new paradigm and markets can only go up, because that's never the case. But we sort of find ourselves in a familiar situation that the world is oversaturated with debt. And to get away from that, Western governments are having to debase their currencies, and the only way to basically survive that is to take more risk. So people are doing that, whether it's in property, in shares, in private debt, or private credit, and all these different things. You essentially have to take risk to stay ahead of the debasement.
Yep.
Crypto is a leverage way to express that view, and the problem is clearly people are expressing that view with leverage. There's a lot of leverage available in the system through all of these exchanges, whether that's a simple margin loan or 100x perpetual swaps. I think a lot of people were long and caught leverage long near the highs, which causes these massive wipeouts.
Yeah.
19 billion's a big number, but the market's grown a lot too. So I don't think you can compare that number to the wipeouts of FTX and Luna and prior cycles, because the market has matured. But as things go on, no one's blowing up, no one's insolvent. Aave cleared the loans, it's still existing and still going strong. So I think it's a bit like you got to have a backburn every now and then so you don't get a massive bushfire, and that's what these clean-outs are. So I'm here Monday waiting for the US to open going, great, there's no one left long leveraged in the system because they've 100% been all wiped out, which is sort of a warning that people really need to be careful when playing with derivatives in these markets. Like, crypto and digital assets are risky enough, and some of these exchanges and their perpetual things are a lot like casinos. So you do need to be careful. But I'm very bullish long-term crypto risk assets and stablecoins in general, because we do have a debt problem in the West, and we are trying to get out in front of that with inflation, and stablecoins have become a key strategic part for the US administration. And I hope our asset base grows very quickly and we become a key funding source for the Australian banks and the Australian government, because again, I just think that's where the future of finance and currency is heading.
Yep. Actually, early this morning, someone who won't be named, but in the Australia's crypto top 10 list out of the 50, did mention that was a wipeout that we needed to have, and that we're going to see new all-time highs at some stage very soon. In fact, happened to mention 180,000 on Bitcoin. So I'm excited. Every time I listen to him speak, I'll get very excited.
No, I don't think the thesis has been invalidated at all.
No, exactly. No. I think if I have to think about what could bring it to a stop, it would only be if there was some sort of joint agreement from the Western nations to bring in a mechanism to stop spending unchecked. Okay, so that might be a automatic mechanism to, if the spending relative to GDP got out of whack. And something like that might stop it accelerating as quickly as what it is. It won't stop it going up.
Well, luckily I haven't seen anyone propose that.
Exactly. So that's right. Exactly. Ed, over to you. Last question, mate. Manners is calling time. What does success look like for Macropod in 5 years? Give us your good oil.
Ooh, I think success looks like, I'd say from an AUM standpoint, we definitely would like to think that we'll make up a reasonable amount of the money supply, the Australian dollar money supply. So when I say that, we'd like to see north of 1% at that point. That is, Scott Besson thinks that stablecoins will be at least 10% in the US. And I think the thing that we've found really exciting about this opportunity, and you guys kind of alluded to it before, with regard to the tether discussion, the addressable market is so big for this and the opportunity is so vast. I think realistically for us to get to that point, we do need to have, I think the regulatory framework will be there, but also equally we need to prove out the use cases for really relating to sort of tokenization of real world assets. This business is really, the good thing with this business is that we are heavily incentivized to grow the transaction volume, because as Toby said earlier, there is a positive correlation between transaction volume and AUM growth for Macropod as a business. So I think success for us really looks like delivering on sort of those 5 to 7 key distribution channels that we're looking at, and being a really meaningful part of the global FX trade volumes, because we think that that's really where the disruption can come and where a real problem can be solved. And I think that, as Drew said, we'll be looking at financing rounds along the way and everything, but really sort of bringing into the fold and partnerships which can sort of validate the use case for the real world, so that everyday people in Australia are using AUDM and they don't even know it, and it's saving a lot of people costs, and it's hopefully in significant circulation through a whole bunch of different use cases that we're targeting.
Brilliant, mate. AUDM, 5 rockets. Ed and Toby, been an absolute pleasure to have you guys, and it's great to be in the same team together. So looking forward to the ride. And Drew, you're looking good as always. And Manners, you haven't ceased to do what you do every week. You've been quiet as a church mouse. But to all our listeners and viewers out there, thanks for listening in. We're nothing without you, and don't forget to give us a like. Okay, cheers.